Okay, we'll start video 2 of 3. What is this? DXYZ? Huh. Rolls right off the tongue. What is this? Yeah. Okay. So there's nothing to be. I don't know what it is because it doesn't have any description. A non-diversified closed-end management investment. Okay. What do you know about it? Why would you put your money in something like this? I don't know anything about it, so I'll comment on the chart. You have a lot of support below 14 and a lot of resistance above 16. So if you take out 18, you probably get to 23 or 24. And you should have an unbelievable buyer below 11. ETH. What is happening? ProShares, Ether Strategy ETF. Is this Ethereum ETF? So is this like the equivalent of Beto? All right. So technically speaking, there is a support at 67, 68, and it better hold 62. And I have a bearish view on Ethereum now from a technical perspective. I own Ethereum for the long term. I booked a lot, and I have a core position which I'm not trading, so I will hold it even if it goes down to 1,000 again, where my entry price was. Now it's whatever, 3,400. If you lose 62, you're probably going to 48 to 50. Remember, if this is what it is, this is crypto, and these numbers should not shock you. And taking out 85 will get you 104. Eaton Corporation, you better hold 310. And if you don't, you're going to 294. Rallies into 326, 28 should be sold. If by some miracle they take out 330, they get to 342. Stable P&L. The stock is not stable. That's pretty crazy. Good grief, I would not be long this thing. Not at this level. EWW, Mexico. I am tempted to go long. I don't understand exactly what happened. They had an election. They elected a woman, I believe, and the stock market fell apart. There must be a business reason for it. It's done that before. So if you look left, I think an attempt to go long on this dip was a good idea. Like $55, maybe get out at 60 to 61. It would be a trading comment. Anything above 60 will be an exit for me. If you come back and lose this low they just placed, it goes to 48, 46. I honestly don't know what that means. I just came back from Mexico. It seems booming. Although the place where I went, I've been there before, they've downgraded themselves and they've cut away a lot of expenses. So maybe the economy is hurting. In other words, they gave us fewer frills for the same price we were getting before. So there might be a downgrade in the economy or just caution overall. And sometimes caution overall creates a recession. Frontline. What is this? The dog breed thing? No. Pretty wild P&L, quarter after quarter. Let's comment on the chart. Sellers, I would anticipate around 27. Buyers scattered. The lower you go, the stronger they get. 24.20 would be pretty good entry area. If for whatever reason you lose 23, I don't see why you would. You have backup support as well, but let's say you do, it opens up a can of worms, technically. You do have a good consolidation zone around 23.5. So if it falls there, that would make a great entry price. I don't know what this is. It's delayed. What is this? Games Workshop Group. Steady P&L, semi-annual. Yeah, I don't know what that is. Let's zoom out. This here, folks, is not a good entry. Why? Because I look left, and the last time they were here, they had a disaster. So I would assume a disaster is coming. So I don't get trapped in it. I would avoid it. Buy the dip. Buy the closer to 10,000, the better. What is this? Is this the right GAW? Sometimes they have. Yeah. Google, all in. I'm all in. No, I am not. No. I would be bearish Google for a trade. I would buy dips in Google for an investment. Nowhere near this level. I'm a big fan. I'm in the ecosphere. It's a cash cow. I don't believe management is as great as the stock itself. They have a weak management. They yielded to Wall Street before, and they broke up the company and got rid of everything exciting. So rallies into 184 should find resistance, and if they do, they might curl back down and come down to say 177 over the next few weeks. Then it would be more exciting. Look left. There's a lot of buyers, a lot of transactions at 176 plus or minus. However, let's say the market hits a hiccup. It's not impossible for Google to be at 164 pretty quickly. Okay, so this giant W is bearish. Target 1 is at 180. Target 2 is at 176. Target 3 is somewhere around 167. And you can't short it unless you're selling a call spread or something like, or a debit put spread. Like, for example, I shorted Visa one time. I mentioned it a couple weeks ago. 15 days ago, I sent out a closing note during the day. I said, I'm shorting Visa. I may share it later. I never shared it because it started out wrong, but I did short it with a put calendar diagonal. And I looked yesterday and it was really green on a big dip from Visa. So a strategy like that leverages short-term strength, and you bet on I bought a put for August and I sold a 2-week long put against it. That kind of trade on Google might work. It might work on the whole market, actually. IEF. Is this icon? Who is this? No. Intermediate Treasury. So what is intermediate? 2 years? So folks, the TLT is hard enough to trade, let alone this one, 7 to 10 year. Okay. Rate cuts, not rate cuts. Those headlines will move this stock. Technically speaking, this thing has support at 93 to 92.60 and sellers at 94.80. If you get above 94.80, you can get to 96. So I'll just make comments on the charts and then you can trade it. Intel, the biggest loser, honestly speaking. This company has gone from being the beast to still a beast, but a puppy. I don't know what's going on with AI. NVIDIA is eating its lunch. Look at the sales. Year after year, look at the profits, gone. Quarterly stabilization, maybe, but oh boy, talk about fall from grace. I'm still a proponent. I buy machines that are Intel. I don't buy AMD machines. And so from that perspective, yeah, it's better than AMD. But man, did they fall off a cliff. And this is a target zone and this is a base. Now, I can't tell you it's not 28 again. I remember people wanting to go long here. I said, you're going to, actually up here as well, I said, you're going to get it in the low 30s before, and it went there. So if the markets hiccup and they lose 29, there's no reason they're not at 27 or 26. Then it would make a pretty good solid entry for me. I would sell puts now to own shares down there as an investment for the long-term turnaround. And if I'm long already, I'm not adding. If I wanted to get long, I will take half a position and double it down in the low 20s and walk away from it. JP Morgan, NASDAQ equity, premium income. Why? What is this? Okay, find out what's in it. And it's probably all the big companies. I honestly don't know what that is. So what are you asking me here? You want to buy it? Up here? Now? Okay, that's on you. If you want to short it, okay. It's like trading the market. So why would I want to bother with a low volume stock? If it pays dividend, then you want to own the share for the dividend. Are you sure you want to pay dividend? I mean, how much dividend does it pay? Where is the dividend here? 8% dividend. Wow. Yeah, pretty scary. I don't know. So let's say it gives you 8% and the market has a small correction and this one drops 3 or 4%. That eats away at your dividend. Then you're in the same ballpark as buying a bond, which is not at risk and it pays 5%, 5.5%, even short-term bonds. So I'm not sure that dividend is a reason to buy something at an all-time high. Buy the dip. The chart says it's up and away. If you're a momentum trader, you can trade that or just wait for a dip to buy. JP Morgan, I would short it again. I'm not short JP Morgan, but I would short it again. I shorted it for us successfully before. And here's the kicker, though. If it dips one more time and it rallies and it takes out 204, it probably goes to 212. So you need to be able to figure out how to short it without getting obliterated if that happens, okay? Target 1 should be about 199. Target 2 about 196. Target 3 we're not going to discuss. We're miles away from it, okay? Look left, a lot of sellers. So had I seen this on Friday, I probably would have been tempted. But it is on my to short list, not to go long list. KB Homes. The home builders have puzzled me as to how can they do this in a rate hike environment. But you can't argue with that. So I would leave them alone. At some point, they're going to get demolished. But where is that point? I mean, they're figuring it out. The P&L does not show cracks like you'd think that it would. 66 is a very big pivot. Look at it. If you lose 66, you'll probably go to 60, which is another set of support. I love it below 56 because that takes this into consideration. Huge failure that took months to come back and break out from. And it's been tested. So 56 or lower is pretty good for me. Doesn't mean it can't go higher. It's just timing, right? If I missed it that much, why now? KHC Crafts. So super strong support zone, but why cannot, if the company is so stable, why can't it hold a floor when the market is super high? I'm afraid this will be in the mid to low 20s, to be honest, in months. A lot of support. You know, you can't short it for that, but I'm afraid, I said, right? So if I'm long already, I'm not adding. If I'm looking to go long, I'll take half of a position in case I'm right. Then I'll add the second half in the mid 20s. KMX, CarMax. The car business should be in trouble if the consumer is tapped out, if the debt is super high, if the rates are going up or not going down. What's going to happen to car sales, right? So I like the CarMax business plan. Like they sell, they're not specific to any one brand. I used to go there like once a week with my son when he was a kid. He loved cars, so he would go to pop in and out of cars. So I do appreciate what they do there. But this chart is too wild for pretty stable business. Sellers at 77, 76. And if you can take that out, you can get back to 83, and I would short it there. And if I'm long, I would exit there for sure. Good base. So if I'm not long, use these candles, actually. That's pretty good. So you have buyers into 69, okay? And hard sellers into the high from last week. And then higher. So buy the dip if you get it, to get long, to ride it up. That's a comment on trading, not investing. Kroger. There used to be a time when Kroger was a good stock. This is not that time. At least it priced out whatever move was here. That was pretty shocking. What could they have said here that is not visible in, when was this? There is no way this was not a stupid move. This was a stupid move. And look at it. Somebody else did it again here. I mean, how stupid are these investors these days? There's nothing going on in the P&L. What the hell could they have said here to fake you out? This management team and the people that cover it should be ashamed of themselves to cause this and that over this P&L. Please, folks, stop trading the news. Like, if you weren't listening to the news, you wouldn't have been caught chasing this or this. If you bought it here, you're down here now. Yeah, you had some profits, but I bet you a lot of people didn't book it. And if it ever approaches 55 again, exit with conviction. 55. Meanwhile, as good a conviction I have in 55 as being a resistance level, I have it's support under 47 and 48. So the closer you get to 47 and 48, the more confidence I have in the fundamentals and the chart. Lucid, avoid. I don't know how else to say it. If you invested in the company for the long term, that's fine. Just sit on it. Don't add or anything. I live in Tesla land. I live in EV land. I see more Teslas than Toyotas, and it's not an exaggeration. I've seen maybe 4 Lucids in all of my time here. since the inception of the EVs. I've seen Ocean almost as many as Lucid. Have you heard of Ocean? No, because they're bankrupt. I see more Oceans. I've seen more Karmas, like the Fisker Karma that failed, I don't know, 10 years ago. It was an EV as well. I've seen more in those than this one. Which means what? Which means they're not producing that many. The cars are great. Great technology. So they say. What the hell is it? Produce it. Sell it. Okay. So that's my comment from an investment perspective. Trading wise, you have a solid support at 2.5. If you lose it, you go back to 2.3. Meanwhile, anything above 2.8 is going to be a struggle and a trigger. If you can beat those candles right here, if Hello Kitty comes out and says, oh, I think I'm long Lucid, it might get to 325 or 325. I don't know. So don't short the company. If you're an investor, sit on it as an investment. Stop reading the news. Just follow the company progress in production. That's all they need, production. I've said that from day one on Lucid. Great tech. How many can they produce? They said, oh, our factory can do 34,000. I was like, okay, NIO already does 70. So just for, comparison. And then they revised the number down to like 11 and then down to like 9. And then I stopped listening. These guys don't know what they're doing because they can't keep up. They can't elevate the production. So track how many company cars they can make. And it's a niche market. It's like whatever, 300,000, 500, whatever it is. It's an expensive car. You will never see as many as Tesla. It's not a Tesla killer. They don't even trade in the same circle. Lennar, unlike that other home builder, this one looks in trouble. So I'm going to say it this way to be nice. If it cannot get out of 154, 155, it's at risk of going to 138, 135. I'll say it again. If they cannot get back to 155 or higher, look at that. Look, I'm just going to move it sideways. If they cannot get that blue line, and you saw what I did, I moved it from back here. It's probably going to come down to 140 or lower. Lululemon. I heard a comedian say it that way, and I can never unhear it. Good support. You better not lose 292. You lose 292, you're going to 265. Simple. And I did catch the falling knife for us and made money and closed it. I would be long now on this dip with a stop as a trade. As an investment, I wouldn't mind owning this stock for a long time. Look at the P&L. Pretty solid. It's like Apple. People don't mind overpaying for the stock for the product because of perception. It's awesome. So quality is paying out. 260, anywhere inside the 260 zone, I'd be long with two hands. I'm going to put an alert right now. Anything inside of 279, 280, same. Anything here, support. So you have support at 290, support at 280, support at 270 or lower. There's no reason. Why is it not up here? Great company, great cash, great business. Why is it not up here? I don't know. GME is up here. Why is this one not up here? Okay. Who is this? Lamb Weston Holding. What did they do? Marketing, value added frozen potato product. Okay. Frozen potatoes. Good solid support through 78. You better hold it. If you lose it, you go to 66. That would make a pretty good entry point. You have a lot of good base down there. Meanwhile, I don't know why they dropped this whole thing, but you do have resistance at 90. And if you crack half this, I would exit the longs from a trading perspective. I don't think they can, quote, fill the gap that easily. Okay, not every gap is a real gap, by the way. If you can take out resistance at 89, maybe you get to 94 and I would exit there. I'm going to show you how it looks differently when you zoom in. So you see all these selling zones, that's how the resistance looks before you get into the gap. If you get to 91, that's a huge problem after that, 91. Hopefully you wrote down these numbers. Mara, I wouldn't touch it. So people say, oh, Bitcoin is going whatever. Okay, so why do you want to trade Bitcoin through Mara? Okay, so if Bitcoin is rallying, Mara may be rallying. If Bitcoin is rallying and the stock market is falling, Mara will follow the stock market down. So if you wanted to trade Bitcoin, I would just trade Bitcoin. You can do it in regular accounts. There's a stock called BITO, B-I-T-O. We got long at 11 and change. It went to 34. And it pays a fat dividend. Why Mara? Mara is a business. They have Mara issues. There's Bitcoin issues. There's stock market issues. You see how many areas of vulnerability there are? If you're trading Bitcoin, you only deal with Bitcoin issues. That's it. So, Mara not for me. Technically speaking, you have higher lows, lower highs. There's a move coming. Direction unknown. Zooming in, areas that you need to pay attention. 21.5, I think, is a hurdle. You take it out, you might get to 23.5. If you get there, there's more upside from that. Meanwhile, the opposite can be said at 18. You lose 18, you're probably going to 16. Good solid support there. You lose that, you go lower. You see, you have a catalyst above and a catalyst below. Which one comes first? I think down comes first, but that's a guess. Educated guess, but it's a guess. MBLY, I would think it's hitting a lot of resistance and it's not going to be able to break through 30. So can you make money being long from 28 to 30 if it comes? The only way I would venture to take that bet is by selling a put spread where I don't need the rally to make money. Decent P&L. Oh, what happened here? Okay, so you need to figure out what happened in that last quarter. That's like 1/3 of the sales. Holy crap. What happened? Are they going to have, did they miss a sale from one quarter to another? You need to read up on it. That is too big to ignore. Anyway, trading wise, I would love it below 25.5. And if you lose 25, whoopsies, 22, 21, I don't know, maybe lower. McDonald's, what do they do again? Nobody knows. No, everybody knows, of course. All right, they've had a huge bounce in this zone before. I see why people would want to take a long. And I think if it gets to 268 or higher, I think it hits a lot of sellers. So if I'm trading it long, I would exit above 266, at or above 266. And you need to hold 249, 248. And of course, if you lose 245, 232, 228. MELI, buy the dips. This is not a dip I want to buy up here. You have a lot of sellers at 1740 or higher. You have a lot of buyers, but you can't lose 1540. If you do, I think you lose another $100 on top of it. Meta, good dip. I didn't see that happen on Friday. How did I miss that? Okay, so Meta hit two targets. That red W hit target 1 and 2 perfectly. Target 3 is like 492-ish. I mean, it could come. And let's say, here's how it could come. So let's say they come down to here. There is support right there. Let's say they come to here and they bounce. And they lose the support, then they might do this. And this is another layer of support. And if you lose that layer of support, maybe eventually it comes down to here. Don't short Meta. It has a current P&L that's pretty good. More than pretty good, okay? And they also said, we're so confident, we're going to completely change the business and we're going to bring in a source of income that it doesn't even exist now. It's called the metaverse. They changed their company name as a commitment. So this is like Tesla 10 years ago. It's a company of something to come. And it's better than Tesla 10 years ago because it actually has a successful business now. So it's like Tesla saying, we have a successful car company now, and we're going to start making $3 billion a year from robots, and we're going to be selling those robots. So now Tesla is more exciting that way too. So you can't short that concept. You just pick your entry point. This was a solid entry point of 490 inside these white circles. So if we get a white circle entry, I will take it very gladly. Merck. Headline stocks. I don't know what happened. Phase 3 trial. That's what you get with biotech and healthcare. That's why I don't trade them, rarely. The dip into 122 is a buying zone if you look left, but look at all of this stuff. So now the question is, what happens on the rally? Well, there's a crap ton of sellers above 127. So I think this one drifts down to 117. I wouldn't be so quick to add and so quick to catch the falling knife. Microsoft, awesome company. Way overdone move, but you can't short it. You'd be shorting the market, and it's easier to short the market. Let's talk kind of like Meta. Rallies might be met with sellers. That candle from Friday was pretty huge. I mean, it looks more violent because of the pop. Anyway, so if they don't get back to a new high, they're at risk of drifting down to 438, which makes for a good support zone. If you lose 438, you're probably going to go to 428 because you don't have a lot of support volume. This area of interest, I bet you will get filled this year. So where are we running? Why are we chasing? If I'm an investor, not a trader, an investor, why wouldn't I wait a little bit? Nick, I'm in it for the long term. Exactly my point. If you're in it for the long term, why are you afraid of missing out on this much? If you're not scared of this much, why are you afraid of missing out on that much? That's the point I try to make, and a lot of people don't get it. If I'm an investor, that's not for me. I think I would get a better entry point in a short period of time. Micron, I was right, and it's about expectations. So they're fixing their P&L. My beef is the cost of goods. Okay, it looks like they're fixing it. You can't sell a product for more than it costs you to bring the materials for the product, not even make it. And that's what they had, and they're fixing it. The report was fantastic, and the stock didn't rally. In fact, it dropped a little bit. I'll say it again. The report, coming from me, who doesn't like Micron, right? The report was fantastic. They grew sales 80%. They grew profitability. They're fixing their COGS, and the stock falls because it's priced to more than perfection. This P&L, look at it, does not yet deserve this stock chart. Not yet. But now that it does bring a good P&L, they don't give it the time of day. There is a chance this orange line gets played out. Don't be a hero too soon. Net, Cloudflare. We've traded it on dips. I would not trade it here. It's going into a problem area. I think 85 to 87, a lot of sellers there. So I would be, as a trader, engaging on dips. They're buying dips. I would take the next dip into 79. P&L is pretty good. Netflix, P&L is very good. It looks like they have been able to tell Wall Street, hey, don't judge us on the number of subscribers, judge us on our business. I didn't think he could do it. This is a solid base now. So anytime it goes into that 640 to 620, solid base. P&L is kind of scattered as far as volume. If for whatever reason it goes below 600, yeah, buddy, take it. Okay, so I'll put an alert here. Up here, yes, it can break out above 690 and go to 710, 705. But as long as it's below 703, I think it's shortable down to 650 from a trading perspective. It already hit target 1 of that red W. Target 2 is 650. Trading comments versus actual comments, investment. So this one, mind-boggling. So the sales report was mild. They shrunk single digits, I think. And the reaction was outsized. The CFO spoke. That's the problem. The CFO spoke. They should never let the CFO speak. But he spoke. And this, folks, is 1.68, I think, of the retracement of this rally. That's almost double. Let's see. Anyway, so the CFO basically downgraded next year's outlook. They didn't say we're going out of business. Okay. They didn't say that. They just disappointed the expectations. So I would catch this falling knife. And I looked at catching the falling knife. There was nothing exciting. I could have sold a put to break even somewhere in the low 60s. I think I'm speaking from memory. My risk for January. And we're right here. I don't remember doing this, but clearly. 1.618 is right here. So let's say 1.5 times down here of what? Of this rally. This is an entry point for an investor for the long term. This is the pandemic levels. This is the old resistance breakout zone from here before the pandemic. So the 2018 correction right in the middle, it's a starting point. If I'm selling my shares now, I've waited too long. I wouldn't add to my shares. I could start a long position in Nike. ServiceNow, that's the exact opposite comment here. Good P&L, I don't want you to short it, but let's see what happens against these tails. It's a breakout. I saw this coming to a degree. They averted half the disaster. They almost filled my own target. Great rebound. I don't know if it can take these out with confidence. Nucor. Is this one of those magical energy companies? Digital banking services. I don't know what it does. Breakout. Don't be short. If you wanted to invest in it, maybe wait for a dip at closer to 1240. If you're lucky, closer to 12.1. Yeah. NVIDIA. I've heard of it. All right. So they're tracing out the white lines. Let's see if they can take this out, the resistance line at 131, before they finish retesting 115. This white line can play out in the next few weeks, but it's going to take some pretty tough work from the bears, which is easier said than done, but it's available. I wouldn't short NVIDIA. I've said it. I'm just cautioning people to add that are thinking of taking longs with conviction. Great company, great future. Just timing. Leave room to add at much lower prices. NVDL. What is this? 2x long NVIDIA daily ETF. There's no need to trade this ticker. No need, absolutely no need. First of all, you don't know this company is going to be in business and this ticker is going to exist. Besides, NVIDIA itself is exciting enough. You don't need to leverage it and make it 2x. If it's cheaper dollar-wise, but I can tell you my experience with things like this, they don't act the same as the stock. I'm going to go on a side note to prove that to you, okay? All right, you've heard of a ticker called the QQQ, right? Okay, I'm going to take out all those lines on the QQQ. Okay, we're going to go to a daily chart. In fact, we're going to go to a weekly chart. All right, so let's use the pandemic. The pre-pandemic, the pandemic crash, the rally, the correction. Here's the pandemic crash. Here's the correction. We never came close to the pandemic crash. You get the point? Okay. Here's a stock that's supposed to track this one leveraged 3 times. T, Q, Q, Q. Okay? Let's go through the same logic. Pandemic, start, crash. The correction, way below the pandemic. Way below. So if this is like this, why didn't it stop up here? Why did it go all the way down to here? Nick, you don't understand. There's this, and that's exactly my point. I don't understand, nor should you. If you want to trade NVIDIA, just trade NVIDIA. Why go after this leverage? Just buy double the calls. If you want the double the leverage. Anyway, you can still trade it, but it's not for me. You have resistance at 77 and support into 62. You lose one of those lines, you'll go in that direction. You take out 77, you get to 88. You lose, what did we say, 61, you get to 48. And now we'll go to video 3 of 3.